Hi, everybody. This is Seth Martin, and welcome to this week's Middle Class Investor. Well, we had a down week in the market. We're looking at a chart of the S&P 500, and you can see here that the market was down for the week and down pretty handily. Given the range and the way the ranges are, let me get on a price only chart since there's so little variation in these prices. It's hard to see with when I had the studies on there. But you can see we closed outside of this consolidation area that we've been looking at. But having said that, it's still very sorry about that. I can't get it lined up the way I want it. Zoomed in a little too far, I think. It's still lined up, very sideways-ish right through here. So I guess that's my way of saying I'm still looking for a higher close somewhere up in this blue area up here, somewhere up in this area right in here. And so because of that, I don't know. I think it looks to me, it looks like at this point it's going to maybe stop going down here, or maybe it goes down a little further and then bounces. But I'm still looking for a higher high somewhere in this 2140, 2145 area max. I mean, nothing higher than that. Really only just slightly higher than the previous high. Let's look at the volatility index. Volatility expanded last week upward, which is what you would expect with the market being down. It's still a lot of complacency in this market. We had 2 weeks in a row of expanded volatility. You can see the ranges were pretty high, not quite as high as this range here, but the ranges from top to bottom were pretty significant the last couple weeks relative to the open and close. And I think volatility is going to stay right about here until we get a higher close in the market. So I'm going to try to keep things brief today because not a whole lot happened. It was a lot of selling, but it didn't look overly aggressive to me. So I don't know that it may just be because it's such in a tight range that the price action is just appears very narrow. I don't know. Let's look at hold on, that's the 30-year Treasury yield. Let's look at the 10-year Treasury, because we do have a change in this, and I suspect this is what's probably going to drive the next move in the market, is this Treasury yield. So we've been talking about this for a while now, that if Treasury yields are going up, that means bonds are going down, which means if you have a bond fund, you're losing money. And we did break this lower trend line, this descending trend line, pretty handily, actually. A lot of times what you'll get some sort of retest. So we could get maybe a little higher next week, and then it could start working its way back down to retest this line. But then it's likely to take off in the upside direction. And this upside move will probably coincide, or it could just, the other possibilities, it could just continue to move up from here. So, but as long as this is going to go up, the market in general is going to be under pressure, because the general consensus is that rates are going to be low for years. And I think the people that think that are overestimating the market's comfort with loaning the United States government as much money as it's been loaned thus far, and then loaning more. So I don't think rates are going to stay this low for very long. I think they're probably as low as we've seen, as they're going to be, and only go up from here. So let's look at the euro US dollar. So the euro pulled back a couple weeks ago, found a bottom, found support here, found support in this area right here, and then is bouncing. And I suspect the euro is probably going to move up into this area, maybe slightly higher, like this. It's really in a place where it could go up or down. I know that sounds crazy, but we've already kind of hit support. Resistance. This resistance area was right here, kind of off this little triangle, and we've already hit that. So we could just be setting up for a deeper run to lower prices. That's going to be hard for people to believe. They're probably, most people think the bounce in the euro is over, but I think the dollar has higher to go, so I suspect the euro has a lower to go. And we'll look at the dollar in a second, but basically the euro moves opposite from the dollar. Let's look at Germany. Germany's looking a little weaker thus far, but is still holding this trend line. And as long as it does hold the trend line, Germany is poised for a bounce up into this area, but it does look like it's trying to, try to break this trend line. So there's nothing to do right here, but just wait and see. If it breaks the trend line, we would expect a retest of the trend line, and if it doesn't go through it, then it's probably going to go below it. So that would look, just so you know, that would look something like, let's say it broke the trend line next week, and then in the next few weeks it would meander its way back up to retest that trend line. And if it doesn't go through it, like this, then it's probably headed lower, probably at least to these lows back here. I don't know what time period this is, or what month and day this is, but this area back here, if you can see that. This area right in here. So that's Germany. Let's look at Japan. Japan, had consolidated for a long time, and now is still trying to make its way up into this resistance area, although it is showing some weakness. But I suspect that it will make its way up there. Usually, if it gets this far, it goes the rest of the way. So that's Japan. Let's look at the UK. The UK has been weaker all along, but and sold off from this resistance area. The question is it going to continue to sell off? Well, before it continues to sell off, it's probably going to bounce a little bit. The question is it going to do something like this? And we don't know, but I would say if it takes out this low right here, then it's definitely coming down lower. And we'll just have to wait and see if it takes out this low. It took out this low, but it didn't close below this low. And those closing prices are real important. It tells us, the reason we're looking at a weekly chart is because it's a larger time frame. And if the market is down in a larger time frame, certainly in a daily time frame, it's going to feel even more down. So that's what we're using to kind of adjust our 401k or get to the sidelines or whatever you choose to do personally. I guess that's all I want to look at there. We can go to oil, look at NinjaTrader, and look at crude oil. I can find it. Here it is. So we've been looking at this. We've been looking for crude oil to bounce into this box area. It looks like it's well on its way to do that. It's going to be several months probably before it makes its way all the way up here. And then to me, my gut feeling is it's probably going to make a lower low. It's probably going to take out these lows back here, this one and this one, if only slightly. I mean, we're talking about maybe coming into this $40 area, and then bouncing pretty hard. And then, of course, the bounce up it'll be pretty big. It'll be up into this $80 area. So crude oil is going to be in the news a lot here in the next couple of years. From now and until the next couple of years, there's just a lot happening there in crude oil to be watching, and it impacts so many people. There's so many jobs that are created with that industry, and not unlike my own. So here's the DAX. The DAX is at kind of a shorter term support area, but certainly if it doesn't hold this area, then the DAX is likely to roll over and start making lower prices down in this area. So this area is pretty critical support for the DAX, and we'll just wait and see if it holds. If it doesn't hold, the market comes down through here and closes, then after a short bounce, we're likely to see the DAX much lower from there. All right. I don't think I have too much more to show you this week. We can look at the ES but it's not really showing us a lot. You can see here where I'm expecting the ES to move is into this area. Whoops. Get this locked in there. Whoops. Not sure why that happened. We'll just erase it. So I'm expecting the DAX to make its way up into this DP resistance area, and most likely will, every time it hits one of these DPs, it sells off for a few weeks. So most likely, if it gets up to this DP area, we're going to see the DAX sell back off into this area right here around the 2070 area. So that's really it this week for the middle class investor. I really didn't hear anything in the news that was shocking or anything like that that I need to share with you. But the news, just so you know, the news will get louder as we start to have risk pick up in the market and the market look a little weaker. You're going to hear a lot more, from the talking heads, and they're all going to be trying to justify themselves because they called the last top or whatever, and I don't know. There's not that many people that did, so if somebody says that, just kind of take it with a grain of salt. So anyway, that's it for this week, everybody. Thank you for coming in. Promote the YouTube channel, Middle Class Investor, to your friends and family. I do post articles that I think are interesting from Zero Hedge and other places periodically on Twitter, as well as the video gets posted to Twitter. So you can follow that if you like. I don't post a ton of stuff, so I'm not going to blow up your Twitter account, but you can see things occasionally from me on Twitter, and that is at @InvestorClass. And that's about it, everybody. Thanks a lot for coming in. We'll see you next week. Take care. Have a good one.